Hello again, everyone. It's time to dive into one of the most exciting and impactful processes within SAP, production execution. This is the stage where all the planning and preparation come together, transforming raw materials into finished goods that drive business outcomes. In this session, we're stepping into the heart of the production process, but with a very specific focus. While we'll touch on the essential steps of production, our main goal is to explore how these operations integrate seamlessly with financial accounting, FI, and management accounting, CO. We'll uncover how the system tracks and reflects every movement, like material consumption, production activities, and inventory updates, across the financial and controlling landscapes. You'll see how costs are allocated, how inventory values are updated, and how production impacts the overall financial health of the organization. This isn't just about executing production, it's about understanding the bigger picture. Every raw material consumed, every hour worked, and every finished product created leaves a financial footprint. Together, we'll explore how SAP captures these details, ensuring transparency, accuracy, and alignment between operations and financial strategy. So, get ready to roll up your sleeves as we enter the production environment. Let's discover how SAP bridges the gap between shop floor activities and financial insights, turning production into a cornerstone of value creation.
In this overview of the plan-to-produce area, we see a collection of tiles, each representing a key production activity. These functionalities include maintaining production bills, scheduling runs, and managing stock requirements. For this exercise, we'll focus on creating a production order and its cost components, emphasizing integration with controlling and financial accounting. Pay close attention to the streamlined navigation designed to simplify production processes. Moving forward, we locate the specific functionality to initiate a production order. This step sets the foundation for the production lifecycle, allowing us to define essential parameters and create a robust framework. Note how the interface ensures ease of use, with clearly labeled options for a seamless transition. Now, we proceed to the production order creation screen. This step allows us to specify essential details, such as the material to be produced, the production plant, and the order type. These inputs form the backbone of the production process, ensuring clarity and accuracy from the start. Once the essential fields have been populated, we proceed by clicking the Continue button at the bottom of the screen. This action confirms our input and transitions us to the next step in the production order creation process. At this stage, the system displays the initial screen of the production order header. Here, general data such as material, production plant, and order type are automatically pre-filled based on previous inputs. In the next steps, we will enter the planned quantity and the production start and finish dates. Now, we input the planned quantity for production. In this example, the total quantity is set to 10 pieces. The straightforward interface allows for quick adjustments to the quantity, ensuring that planning aligns with actual production requirements. In this screen, we input the start date for the production order. Once this date is provided, the system automatically calculates subsequent dates using forward scheduling logic. This ensures that the production order aligns with a set starting point, creating a foundation for the next steps in the scheduling process. After confirming the input, the system processes the scheduling and displays the calculated end date for the production order. This progressive scheduling ensures a structured timeline for the production process, aligning resource availability and capacity with the planned start date. The system confirms successful scheduling at the bottom of the screen, validating the production order's timeline. In the Control tab, we focus on the settings crucial for cost management and production control. The reservation is set to immediately, ensuring materials are allocated as soon as the order is saved. Under the Costing section, the system highlights the costing variant, overhead key, and costing sheet, which are pivotal in determining planned costs upon saving. These parameters ensure alignment with the organization's cost management objectives, providing clarity and precision for financial oversight. In this step, we explicitly request the system to calculate the planned costs for the production order by selecting the Cost Order option. Although this process would typically occur automatically upon saving the order, it is demonstrated here to highlight the cost determination at this stage. This ensures all planned costs are calculated and visible, facilitating accurate financial planning before proceeding further. Having reviewed and set the key parameters for the production order under the Control tab, we observe a confirmation message below, highlighting that the planned costs were successfully calculated and displayed. This assures us that the order is aligned with financial and operational guidelines, setting the stage for further actions. To analyze the cost details within the production order, navigate through the menu, go to Costs Analysis. This pathway provides access to a detailed report that breaks down the planned costs and allocations for the production order. By utilizing this feature, users gain comprehensive insights into cost structures, supporting accurate financial monitoring and informed decision-making. In this detailed overview, we analyze the planned cost structure for the production order. Each cost element, such as material consumption, personnel hours, and activity allocations, is displayed with its corresponding planned cost. This breakdown provides valuable insights into the financial planning behind the production process, ensuring that all key components align with the organizational budget. In this detailed analysis, we examine the planned consumption of raw materials required for producing 10 units. The system specifies the planned quantities for each material, raw 001 10 units, and raw 002 10 units, with corresponding planned costs of €100 and €200, respectively. This information provides a clear view of material planning, ensuring accurate cost allocation and production efficiency. Next, we analyze the planned activities essential for production, machine hours and personnel hours. To produce 10 units, the process requires 1 machine hour and 1 personnel hour per unit, ensuring the workload is properly aligned with production needs. For machine hours, the activity rate is €10 per hour. When applied to 10 units, the total planned cost is calculated at €100. Similarly, personnel hours are assigned a rate of €20 per hour, resulting in a planned cost of €200 for the same 10 units. These planned values are reflected in the total planned costs column in the report. This comprehensive breakdown ensures that activity costs are allocated with precision, aligning the production process with financial and operational objectives. Additionally, these planned costs establish a reliable benchmark for monitoring variances during the actual production phase. In this step, we review the planned cost for delivering the finished product to inventory. Based on the consumption of materials and activities, the planned value for delivery to stock is €600. This value represents the expected inventory cost, assuming no deviations occur, and serves as a critical benchmark for financial and production analysis. In this step, we navigate back to the production order header screen. This allows us to review the details and ensure that all necessary fields are accurately filled out before proceeding further. Here, we consolidate our inputs and prepare to confirm the production order status. This review ensures everything is aligned with the planned production process. On this screen, we observe the status of the production order. Currently, the order is in a created status. This status indicates that the order is drafted but not yet ready for execution. To transition the production order to the execution phase, we select the Release Order button. This action updates the status from created to released, signaling that the production order is finalized and ready for subsequent processes. The released status ensures that all components, materials, and schedules are locked and allocated, preparing the system for efficient production execution. Once released, the production order is officially marked as REL in the Control section. This status confirmation guarantees that all planned resources and schedules are secured for execution. Additionally, critical parameters such as costing and scheduling remain accessible for further verification, providing confidence in the readiness of the production process. With the production order released, the final step in this phase is saving the order. By clicking the Save button, the system finalizes the process and generates a unique production order number. This ensures that all order details are logged, enabling a seamless transition into the production workflow and subsequent activities. Returning to the main menu under Plan to Produce Processing, we now prepare for the next stage in our training. The focus of this exercise is simulating the consumption of raw materials for a production order. This step reflects the physical movement of materials from inventory to production, representing the utilization of raw materials in manufacturing. In this context, materials are withdrawn from the warehouse and made available to the production line for use. In this step, we will manually process the consumption of raw materials. While in most real-world scenarios this process occurs automatically during confirmations, we opted for a manual approach in this training to provide a detailed walkthrough. This method ensures a comprehensive understanding of the financial and material postings involved, demonstrating how the consumption impacts inventory levels and cost accounting. In this step, we prepare to perform the goods issue. Notice in the upper left corner that the field is already set to Goods Issue for Order. In this scenario, the goods issue will be linked to a production order. We begin by entering the production order number in the designated field. At this stage, the system has not yet recognized the reservation, it has only identified the production order number. This step is crucial for linking the material consumption to the corresponding production order. After entering the production order number, we press Enter. This action confirms the selection of the order, allowing the system to proceed and recognize any related reservations or planned quantities for the subsequent steps. On this screen, the system successfully retrieves the reservations associated with the production order, displaying the planned quantities for consumption. Here we observe that the system identifies 10 units of material 001 and 10 units of material 002. Each line corresponds to a reservation tied to the production order, ensuring the correct quantities are allocated for the production process. This planned consumption aligns with the production requirements established earlier in the workflow. At this point, we proceed to record the transaction by selecting the Post button. This action finalizes the goods issue process, reflecting the consumption of raw materials for the production order. Confirming this step allows the system to complete the posting process, preparing the data for further analysis in subsequent screens. Once the goods issue is successfully posted, we observe the generated material document number displayed at the bottom of the screen. This document serves as a key reference for tracking the transaction in the system. From a logistical perspective, the raw materials are deducted from inventory and consumed by the production order. In financial accounting, this action results in a credit to the inventory account and a debit to a cost account, ensuring accurate stock valuation. From a controlling perspective, the cost is directly linked to the production order as a controlling object, enabling precise cost allocation and management. This step concludes the material consumption process, showcasing the integration of logistics, financial accounting, and controlling within SAP. Now that the goods issue has been successfully posted, let's analyze its impact on the system. Our goal is to review the material document generated and understand its connection to financial accounting and controlling. In this screen, we access the display function to view the material document. Conveniently, the system automatically suggests the most recent document for review, simplifying the verification process. Once displayed, the material document provides key details about the transaction, including quantities, materials, and valuation data. This comprehensive overview ensures transparency and accuracy. Switching to the Doc Info tab, we gain additional insights, such as the creation time, the user responsible for posting the document, and a breakdown of the transaction's components. These details enhance traceability and accountability. Next, by selecting the FI Documents icon, we access the accounting documents generated by this transaction. This step links the material movement directly to its financial implications, ensuring seamless integration. In this view, we observe 3 key documents created during the goods issue process. Each document serves a specific role in integrating and validating data within the SAP system. FI Document, Financial Accounting Document. This document captures the financial impact of the goods movement by crediting the inventory account to record the material's removal from stock, debiting the consumption account, reflecting the material's usage for the production process. CO Document, Controlling Document. Controlling document focuses on cost consumption related to the production order. It ensures precise cost allocation and supports effective cost monitoring throughout the production cycle. Together, these documents showcase SAP's ability to integrate financial accounting, controlling, and material management, creating a unified record of the transaction. Now that we've reviewed the documents generated during the goods issue process, let's move on to examine the financial accounting document in detail. To do this, we select the Accounting Document option from the list in the pop-up. This action takes us to the Display Document Data Entry view, where we can explore the financial postings associated with the goods issue transaction. In the Display Document Data Entry view, we see a detailed breakdown of the financial postings. This view provides a comprehensive analysis of how the transaction impacted the relevant accounts. Let's review the entries step by step. First two lines, Material Raw 001. First line reflects a credit to the inventory account, account 131000000, recording the removal of Material Raw 001 from stock. The second line debits the consumption account, account 511000000, representing the materials usage in the production process. This entry is directly linked to the production order, ensuring traceability and accurate cost allocation. Next two lines, Material Raw 002. Similarly, the third line shows a credit to the inventory account, account 131000000, for Material Raw 002, indicating its withdrawal from inventory. The fourth line debits the consumption account, account 511000000, recording the materials consumption for the production order, maintaining consistency in cost tracking. Alright, now that we've reviewed the detailed postings in the display document view, let's move to the trial balance screen to analyze these transactions from a broader perspective. In this step, we'll explore how financial postings, such as inventory credits and consumption debits, are summarized in the trial balance. In the initial trial balance, we can see the raw material inventory account still holds a balance of €3,000, representing the initial entries for materials Raw 001 and Raw 002 recorded in previous exercises. This snapshot highlights the balances prior to any consumption for production. Now, let's proceed to update this report to reflect the material consumption. After refreshing the report, the trial balance updates to reflect the cumulative effect of the material consumption. At this stage, the raw material details for Raw 001 and Raw 002 are no longer displayed individually. Instead, the total inventory account balance has adjusted to show the consumption of €300, representing the combined usage of the materials for production. This adjustment is reflected in the overall inventory account balance, which now shows a corresponding decrease for the material usage in production. This consolidated view simplifies the financial analysis and highlights the impact of material consumption. In the next step, we navigate within the trial balance report. Using the scroll bar on the left panel, we locate the characteristic Order ID. Adding this dimension to the trial balance enhances the view, allowing us to break down account balances by production orders. Now, with the Order ID dimension added, the updated view shows how material consumption of €300 is directly linked to the production order, while the inventory account reflects a balance of €2,700. This breakdown provides a detailed view of cost allocation to the production process, showcasing the seamless integration of FI and CO data and ensuring transparency across financial and controlling functions. In this trial balance report, we are presented with a consolidated view of the general ledger account balances and their allocation to controlling objects, which bridges the gap between financial and controlling perspectives. First, let's focus on the account balances displayed in the rows. Each line represents the balance of a specific general ledger account. These balances provide an overview of the financial accounting data. Now, shifting to the controlling view, we can see that the expense accounts are attributed to specific CO objects. For example, the cost center reflects expenses previously recorded for payroll and maintenance, as we had noted earlier in this exercise. Additionally, the material consumption expenses related to production are allocated to the production order. This allocation clearly shows how costs are distributed between the production order and the cost center, providing clarity on where resources have been utilized. This dual perspective allows us to track both the financial impact at the account level and the operational distribution at the CO object level, ensuring a comprehensive understanding of the organization's cost flows. Let's start the next exercise by navigating back to the main screen, where we can review the plan-to-produce processing section. Our objective here is to initiate the production order confirmation process. This step is critical for tracking the activities and costs involved in production. Here, we open the Confirm Production Order Operation app. This action takes us directly to the confirmation interface, where we'll enter specific details about the production order and its activities. This screen plays a fundamental role in updating the system with actual production data. The production order confirmation screen provides fields to input the operation details, quantities, and any additional information necessary for the confirmation process. This is where we start detailing the activities performed during production. Next, we fill in the production order details. This includes entering the order number, operation code, and other required fields. These inputs ensure that the system recognizes the specific operation being confirmed and associates it with the correct production order. At this stage, the system calculates the proposed activity times based on predefined rates within the controlling module. For this operation, the system suggests 600 minutes, equivalent to 10 hours, for each activity. These times are linked to their respective cost rates, providing a clear cost allocation for the activities performed. Once all the necessary details have been filled in, we proceed to save the confirmation. This step updates the system with the actual production data and prepares it for the allocation of costs. Finally, we see the confirmation successfully saved by the system. This indicates that the production data has been recorded, and we can now move on to analyze the cost allocation in the next steps. To continue, we return to the trial balance report. The goal now is to analyze how the confirmation of the production order has impacted the allocation of activity costs within the system. In this step, we first observe the trial balance report prior to any updates. At this stage, the cost center still holds the initial expense of €300, representing the previously recorded costs for activities associated with production. This provides a snapshot of the financial allocation before the activity confirmation and allocation processes take place. Next, we see the updated trial balance report following the activity confirmation process. Finally, the conclusion of this exercise demonstrates the complete transfer of costs from the cost center to the production order. The cost center balance is now zero, signifying that all production-related costs have been fully absorbed by the production order. This transfer is achieved through the activity confirmation process, which credited the cost center and debited the production order. As a result, the production order now reflects a total cost of €600, composed of €300 for material consumption and an additional €300 from activities, specifically €100 for machine hours and €200 from personnel hours. This report provides a clear and consolidated view of how costs flow from departments to production orders, showcasing the integration of financial and controlling data in SAP. At this stage, we transition from confirming the production order to recording the finished goods in inventory. To begin, we return to the Plan to Produce processing menu, where we will initiate the next step in the workflow. Next, we select the Post Goods Movement application. This step is critical to register the transfer of finished goods from production to inventory. By choosing this option, we prepare the system to accurately record the stock movement. In this screen, the system initially opens in display mode, which is intended for reviewing past material movements. However, since our task is to record a new goods receipt, we need to adjust the mode to enable data entry. Here, we configure the screen for the goods receipt process. Using the drop-down menu, we switch the mode to Goods Receipt, which activates the fields required to register the receipt of finished goods in inventory. With the entry type configured, we are now prompted to input the production order number. This number establishes the connection between the goods receipt and the corresponding production process. Here, we begin typing the production order number in the designated field. As we type, the system suggests potential matches, streamlining the process and enabling us to quickly identify the correct production order. Once selected, we proceed to the next step. Now that the production order has been entered, the system processes and validates the input. At this point, the screen prepares to display detailed information associated with the selected order, ensuring that all data is ready for the final posting. At this point, the system successfully retrieves and displays the details of the selected production order. Key fields such as material, quantity, and storage location are now populated. The proposed quantities for the finished product are visible, confirming that the goods receipt is ready to be posted. To finalize this step, we validate the entered information and proceed by clicking the Post button located at the bottom right of the screen. This action officially records the finished goods in inventory and simultaneously triggers the appropriate accounting entries. Once the goods receipt is successfully posted, the system generates a material document. This document confirms the transaction, and its unique number is displayed on the screen, serving as a reference for future inquiries or audits. This concludes the posting process, ensuring that the finished product is now properly reflected in the inventory system. With the goods receipt posted, our next step is to review the material document. For this, we navigate to the Display drop-down menu and explore the available options. This step is essential to verify the details of the transaction and confirm that all recorded data is accurate. We now select the option to display the material document related to this goods receipt. The material document is then displayed on the screen, allowing us to confirm that the transaction has been successfully recorded. At this stage, the system provides a basic structure of the document, which is ready for further examination. In this view, we can observe the detailed information associated with the material document. The system presents a comprehensive breakdown of fields, including the finished product details, quantities, storage location, the linked production order, and the movement type. This detailed overview ensures the accuracy of the goods receipt and validates proper accounting integration. In the Doc Info tab, we can now observe key details about the material document. These include the user who entered the transaction, the exact timestamp, and the associated transaction code. Additionally, the FI Documents button becomes available here. This button provides access to the financial document associated with the material movement. Let's proceed by clicking on the FI Documents button to explore the financial postings generated by this transaction. After clicking the FI Documents button, the system displays a list of documents generated during this transaction. These include the accounting document, controlling document, and material ledger. For this step, we will focus on the accounting document entry. Let's click on the accounting document to proceed to its details. In this screen, we can observe the financial postings resulting from the goods receipt. The system has credited the expense account linked to the production order with a total of €600, reflecting the transfer of costs out of the production process. Simultaneously, it has debited the balance sheet account, inventory finished goods with the same amount, representing the addition of 10 units of the finished product to the inventory. Each unit is valued at €60, confirming the correct allocation of inventory value in the financial records. At this point, we are opening the trial balance report in a new window. This step allows us to monitor the financial impact of the production process. We are preparing to observe how the accounts will update after the transaction is finalized. In the current view, the trial balance report is not yet updated. The balances remain as they were before the posting. This screen provides an overview of the previous state, enabling us to compare it with the updated figures in the next steps. After refreshing the trial balance report, the updated balances provide a detailed view of the completed production process. This final step consolidates all financial postings, clearly reflecting the flow of costs throughout the production cycle. The production order has been credited with €600, confirming the successful accounting of all production costs. Simultaneously, a corresponding debit of €600 has been posted to the inventory account, reflecting the delivery of 10 finished units to stock, each valued at €60. This outcome highlights the precision of SAP in tracking and allocating production costs. The zero balance on the production order confirms that all expenses have been absorbed, and the inventory now holds the full value of the finished goods. This demonstrates the system's ability to seamlessly integrate production and financial processes with accuracy and transparency.
Hello again. Dr. SAP here, ready to wrap up what has been an insightful journey through the production process. Let's take a moment to revisit everything we've covered so far. Throughout this chapter, we explored the intricate details of how production costs flow seamlessly through the SAP system. We began by examining the production order, where raw material consumption and production activity postings were captured. These postings ensured that all operational expenses, whether for machine hours, personnel hours, or material costs, were accurately allocated to the production order. Next, we saw how these costs were consolidated. Expenses from the manufacturing cost center, including payroll salaries and equipment maintenance, were fully absorbed into the production order. Combined with the raw material consumption, this resulted in a total production cost of €600. Finally, we witnessed the culmination of this process as the production order was credited, and the finished goods were added to the inventory. This €600 was reflected as a debit in the inventory finished goods account, representing the successful delivery of 10 units to stock. With both the cost center and production order balances at zero, this process demonstrated SAP's precision in cost allocation and its ability to ensure transparency and traceability in production. As we conclude this chapter, I'd like to thank you for joining me on this exploration of SAP's production process. Together, we've seen how the system integrates material management, financial accounting, and controlling, providing an end-to-end solution for efficient production management. But don't go far. In our next chapter, we'll embark on a new adventure into the order-to-cash process. We'll explore the integration of sales processes with financial accounting and controlling, uncovering how SAP ensures that every step, from customer orders to financial reconciliation, is flawlessly executed. Thank you once again for your dedication and engagement. I look forward to seeing you in the next chapter as we continue our SAP journey together. Until then, keep learning and keep exploring.